Hello traders, welcome. We are looking at a very important topic in trading which every trader needs to master. Today we are looking at top-down analysis. Top-down analysis is simply a way of analyzing your trade starting from the larger time frame down to the smaller time frame to make your entry. So when using top-down analysis, you have to understand that it is very important to align your time frames and make a better trade. The advantage is that it will help you to know where the larger trend is actually going. So as a trader, it is very important to know that for you to be profitable in the market on a long run, you need to focus on the order flow of the larger time frame. That is what will help you to be more profitable in trading. So we will dive deep into this concept that will help us effectively read the chart and to enter a trade based on the direction and the order flow of the bigger time frame. So let's start from the weekly chart. This is the British pound US dollar and we are on the weekly chart. So as you can see, our order flow has been bullish here. We have our protected low here. This low is what broke this high. Here we have a break of structure here and trend continues down before we see a move downwards. So when this price failed, price took liquidity here. When price took liquidity here, what will be the next target of the price? It will be probably to hunt liquidity elsewhere, either to rebalance or to continue its move down. So what are we seeing looking at here? We have a fair value gap here. We have a tiny fair value gap here. Price disrespected this fair value gap here. And we see a body closure here. And from what price is telling us here, is likely the next target of price will be here. Is for price to chase this high here. If we zoom out to a bigger time frame like the monthly or so, let's just see if this aligned in any way. This is the monthly chart. As you can see, this was the sweep of that low on the weekly chart, but we are not looking at what is happening on the monthly chart here. Our primary focus is on what is happening on from the weekly chart down to our entry time frame. So we are not actually paying attention to the monthly chart. I just want to use that as a reference point. So on this weekly chart, you can see here is probably our next run on liquidity, but as you see, we have no fair value gap or imbalance for price to run through here. So what I'm actually expecting this price to do is for us to see a kind of price engineer liquidity from this point. Even if price will go to this point, I'm expecting to see a lot of liquidity to be engineered before price will even get to this point. So the weekly charts have given us its own information. So we will move down to a lower time frame from the weekly chart to make a more precise decision. So we are on the daily time frame. In this example, we'll be looking to trade on the last week Monday and Tuesday trades. So that is where I'm actually going to focus. I'm not trying to make this video too long or maybe continue to recently what is happening today, but I'm going to focus on last week Monday and Tuesday price, which is a little bit of these areas here. So on the daily, this is the low that price took on the weekly. So we have a fair value gap here, and we are expecting price to probably move and take this fair value gap. And we are, like I said, we are focusing on this candle and this candle, the Monday and Tuesday trade. So that is where I'm focusing. So we are not looking at what is happening from Wednesday here down to the up. So we are actually waiting for price to run to this area. The daily chart and the weekly charts are almost relative to each other. So we are going to look at the 4 hour, which will give us enough information to trade on. But on the daily chart, we have a swing high here, and also we have some low resistance liquidity here and here that price is likely going to run to and take it from there. We will move to 4 hour to get a more precise direction of where we are going to be taking our trades from. So this is our 4 hour chart. Like I said, we are focusing on Monday, Tuesday trade, or possibly Wednesday. So in the 4 hour, this is where the start of this candle on Monday started. It started from this candle here, then to our Wednesday to this candle here. So this red mark area is where we are looking for to trade. This candle, we are not just paying attention to what is happening at this area. So I want to use this to give you an example of how you can analyze the market using top-down analysis. So as you can see from this recent price leg, price moved to took liquidity from this area. We can see price running to take this high here. Price moves to take this high here. When price took this area, what are we expecting? Is for price to rebalance the inefficiency, for price to rebalance equilibrium, for price to rebalance imbalances. So like I said, price moves from external range liquidity to internal, and from internal back to external. So price has taken this liquidity. So we will be looking for price to rebalance the inefficiency, and we have a fair value gap created at this point. So we are looking for price to come in and mitigate this fair value gap. From there, we can take our trade. So since we know that price has moved, we move down here to enter into this fair value gap. But on a higher time frame like the daily, like the weekly, we are expecting a higher prices. So are we going to wait and when the price enter this fair value gap so that we can enter buy from here? Yes. Or are we going to trade from here and sell at this point to when price enter this fair value gap? Then we exit our sell order and then we will look for a buy from here. The answer is yes. So we are actually going to trade down to this fair value gap. Then from there we can take our buys trade up. So how do we analyze it to trade this point? Since we have really understand that price will actually be going downwards from here to our entry. So as you can see, this top candle that created this fair value gap here was a rejection candle. Price swept that high and rejected it and closed inside of this large bullish candle, which is telling us that price is not likely to go up soon, that price will likely run inside this fair value gap before it moves up. So since we are armed with this information, how would you trade this? We will move into our lower time frame to frame our entry from there. Remember, we have another fair value gap here, which price is likely to mitigate. So we move down to our lower time frame to frame our entry from there. So let's move on to the 15 minutes to get a direction of where we are going to actually trade. So this is the 15 minutes chart. We have this candle that took this high here. This is the candle with that wick on the 4 hour here. This was a rejection candle on the 4 hour here. So this is how it looks on the 15 minutes. So we are going to refer this as our 4 hour candle. Our 4 hour candle. So this is our 4 hour candle range. The most important thing to know in tracking this is that we will wait for this 4 hour candle to be taken out on the 15 minutes. What I mean is that we'll wait for this candle to be taken out, to be swept or to be run before we can probably take our trade. Or if I'm making my entry using a time frame lower than 15 minutes, I'll wait for the same thing to happen on that time frame before I take my entry. So what I'm actually looking for is for price to take this high here. If price should come and take this high here, then I will start looking for my entry. You can look for a disrespected fair value gap or for other confirmations to take your entry. So when price came all this way, price came and run that high here. Price came and run that high here. When price run this high here, that is where I become interested in this trade. Then I will have to move to my lowest time frame, my lowest entry time frame, which is the 1 minute. From there to look for the same thing to happen on the 1 minute chart before I start looking for my entry. This is very, very important. Always wait for to see a sweep in liquidity or a run in liquidity above that high or below that low of the previous time frame you are trading. It is very, very important. Without that, there is no trade. Without that, is a lowest probability trade. You don't have to take that. Meanwhile, as you can see, price run that liquidity and it is headed to this fair value gap on the 4 hour. So that is where I'm looking at. Now let's move to the 1 minute chart to see if we can frame our entry from there. So you see, this is the 1 minute chart here. So this is where we'll start framing our entry here. As you can see here, this is an area where price run this liquidity here. This is the 15 minutes high here. So we will be looking for price to run this high on the 1 minute still before I take my entry. We have price came through and sweep this high here. So this is the area I'll start framing my entry here. Before then, price was in a range from this point to this point. When price run this high here, what should I be looking for? I will start looking for my entry on this smaller time frame. First of all, I will wait to see if fair value gap, a PD array that is getting disrespected. Then I'll probably confirm that price is actually going into my direction. So we have this fair value gap here. This fair value gap serves as a fair value gap to once push price up here, and we see price run through that fair value gap. And when price run through that fair value gap, we can see a rejection from that zone, from that inverse fair value gap. But I'm not going to look at it. I'll rather focus on that because that fair value gap has been mitigated severally. So I still have this fair value gap here. As you can see here, price came and run through this fair value gap here, just respected this fair value gap. As we see, price went into returns to that fair value gap, and we can see a rejection, an outright rejection of the fair value gap. And we can see an outright rejection of the fair value gap here. We still have this bearish fair value gap here. So this area is where I will be looking for my entry. We have a liquidity area here, a low here. This low is my target, will be my first target. Then if I want to trail my take profit, I can trail it from there. Remember, we are targeting price to move to this PD array. We are targeting price to move down to this range. So what am I going to do? I'm going to enter my trades from here. I'm going to enter my trades from there. My stop will be, let's say, below this candle, this bearish B candle here. Then this will be my initial targets. As you can see, this is a 1:3 trade, but you can still target this first one, which will give you a 1:2 risk to reward that you can target here. But you know, as I said before, this price is headed to this area here, and when it heads to this area, then we can still go back and buy into that position. Let's go and look if we can still get another trade here. One thing to know is that when you are trading, always look for areas where we have low resistant liquidity resting. As you see in these areas, we have low resistant liquidity here, we have liquidity here. So this area becomes very interesting, that price will likely go and sweep this liquidity. So that is why price has come to take that liquidity here. First of all, we have price run this low here. That will why we see price move up to rebalance here before we have this strong push here. We have price run into this 4-hour fair value gap. When price run into this 4-hour fair value gap, we can switch to the 4-hour to frame our draw on liquidity. Here is my 4-hour. As you can see, this is our candle. This is this candle that first entered this area of our interest on the 4-hour. So this is that candle. So what are we going to do? We will determine our draw on liquidity. If price should, after mitigating this fair value gap here, what will be our next draw on liquidity? For price to move on to the next draw on liquidity, as you know, we are expecting a higher prices based on analysis on the daily and weekly chart. So we are framing that price will move higher and take this liquidity zone here. So we are expecting price to come and take this high here. So this high here becomes our draw on liquidity. So we are targeting price to take this area here from this point. So when this becomes obvious, we are going to move down to the 15 minutes to start framing our entry from there. So this is the 15 minutes. As you can see, this is the area where price mitigated this fair value gap. So we are going to, like I said before, we are going to trade enter buy from this area, then we'll go. But are we just going to buy into this zone? No, the most important thing, like I said earlier, this is the 4-hour candle. We'll take it as the 4-hour candle. We will look for price to run this 4-hour candle or sweep this 4-hour candle before we start making our decision on whether to buy in this trade. So let's draw this line. So this line, if price come to this area and we have a run of this area, then we can start looking for entry on this 15 minutes, or I would switch to a lower time frame like the 1 minute to wait for the same thing to happen before I start looking for my entry. So wait to see a candle run or sweep, then switch to another time frame and wait to see another candle run or sweep, then start framing your entry from there. As you can see, price came around this level and you will see a close here. This area becomes our 15 minutes candle. So we will likely wait for price to take out this candle here on the 1 minute to frame our entry from there. If you are using 15 minutes as your entry, you can actually start framing your entry from here. It is important to know that this is what is happening here is a market maker model. You can see price came here. We see a smart money reversal from here and price came to run out this liquidity. So we have low resistance liquidity in these areas, hanging in these areas that price will actually go and run through. So what are we looking for here? We have liquidity here. This is our draw on liquidity based on the 4-hour. So I'm going to move to the 1 minute to see if I can wait for price to take out that 4-hour candle. I'm going to move to the 1 minute and probably wait for price to take out this 15 minutes candle here. Then I will start framing my entry from there. This is the 1 minute. As we can see, this is the area price on this liquidity here. And this is our 15 minutes candle here. We'll wait for price to run this low here or sweep this low here, then we'll take our entry from there. So we draw a horizontal line. As you can see on this 1 minute chart, we have the candle first, we have the first run at this area. When the price run this area, we have this candle, another candle, push down and run this, take this liquidity here. So this is what we call smart money reversal, because this is a market maker model on its own on the 1 minute. So we have areas of low resistance liquidity here, which price is likely to run as soon as quick as possible. So we'll start framing our entry. First of all, I will look at a PD array, like a fair value gap that is disrespected or the one that is respected, as we are targeting to buy into this position. So we are expecting bearish PD arrays to be disrespected. So I'm going to draw a rectangle box here. This is a bearish PD array. So if price should disrespect this fair value gap here, we will likely see a higher prices, and then we will likely wait to buy at this inverse of this fair value gap. So price moves on and disrespected this fair value gap here. When price disrespected this fair value gap here, we see price come back and we can see a lot of resistance in those area. Price uses this inverse fair value as a support to push price high. So this is where I will enter my trade. And first of all, wait to see a body closure above this inverse fair value gap, like this candle. By this candle, when I see this closure, then I'll take my entry and place my stop loss. This is my entry, then below I'll place my stop below this low here, a little bit below this low here, because this is where I make my entry. I will target first. You can target 1:2 here. You can target 1:2 first, or you can target this high here. Remember, our first draw, our draw on liquidity on the 15 minutes, first draw on liquidity on the 15 minutes is here. So actually, when you are trading like this, first of all, you have to use your entry time frame for your first target. Probably when your first target is hit, you might move your stop a little bit closer so that you won't have to lose much in the trade. So this is what I normally do. Even if trade go against me, I don't normally move my trades. Even if trade go against me, I don't normally leave my stop the place I entered it at the first place. But in this case here, if you have moved your stop to break even, you would have gotten stopped out here. So that is why you have to move your stop, but don't move it too tight. So as you can see, price move on to take all these areas, all this low resistance liquidity that has been created. So if you assuming you are targeting this extreme low resistance liquidity here, this would have given you a very nice profit from your entry. This is a 1:4 risk to reward trade. So, but always target trades that are very reachable. So this is exactly how you can analyze trade and make your precision entry using analysis what you got from a bigger time frame down to the lowest time frame. As you can see, how this is how I align from weekly time frame down to 1 minute. I use it as entry. But you still have to go and learn this, practice it if you are not used to this, to avoid confusion, because using all this time frame and using information from this time frame sometimes can be confusing. This is how you can use this concept to be profitable in trading. Thank you so much.